Hello, namaskar दोस्तों. So here is one particular article which is talking about the price cap on Russian oil. So we will discuss this particular article. So the heading of the article is how the great gamble on the price cap on Russian oil might just fumble. So what does it mean? It means that as there is a price cap on Russian oil, so it may be fumble or it may be just problematic. Okay, so let's get started. The subheading is restricting the price at which Russia can sell its oil will inevitably affect the country's incentive to pump oil into the market. The West is stand for here, European Union and USA, attempt to cut Russia's oil revenue without drastically affecting global oil supplies may be to find a balancing act in the long run. Okay, so the article is the group of the seven G7 countries, the European Union and the Australia have imposed a price cap on Russian seaborne oil to make it harder for Russia to find its war against war against Ukraine. Under the plan, which took effect on December 5, Western companies that dominate the global oil shipping and insurance business will be banned from offering their service to ship or insure Russian oil that is purchased at a more than $60 per barrel. The price cap is an attempt by the West to cut Russia's oil revenue without affecting oil supply. So you must know what is price cap. The price cap is an attempt by the West to cut Russia's oil revenue without affecting oil supplies. It should be noted that since the beginning of the Russia Ukraine war, the West has been trying to limit Russia's energy revenue. Okay, why West is doing like that? Because most of the revenue of the Russia is depend on the energy sector. Okay, this is the reason why West are trying to put some sanction on their oil export. It should be noted that since the beginning of the Russia Ukraine war, the West has been trying to limit Russia's energy revenue. At the same time, since Russia is a major oil producer that contribute more than 10% of overall global supplies, the West has been wary of imposing sanctions that could cause oil supply from Russia to fall steeply and send oil prices shooting up. Thereby, thereby prices can increase. In fact, it is estimated that crude oil prices could rise to much as 200 per dollar $200 per barrel if oil supply from Russia were to disrupted by Western sanctions. Noted economist just as Janet Yellen, currently US Treasury Secretary, and Mario Draghi, till recently Prime Minister of Italy, have been at the forefront of pushing the idea of a price cap. So these people are very keen, or you can say they were very keen to put the idea of price cap on the Russia, which they believe which they believe will limit Kremlin oil's revenue. Kremlin is stand for Russia here, oil revenue without affecting global oil supplies. Even though the West has cut down its purchase of Russian oil this year, Russia has been able to sell its oil to India and China to keep its energy revenue buoyant. Okay, or you can say to keep its uh, energy revenue balance. The price cap could be seen as an attempt by the West to make buyers of Russian oil pay less for the oil they purchase, thus preventing the Kremlin from profiting too much from its oil sales. The price cap could be seen as an attempt by the West to make buyers of Russian oil pay less for the oil they purchase, thus preventing the Kremlin from profiting too much from its oil sales. Russia has already had to sell its oil at a discounted rates. Russia has already had to sell its oil at a discounted rate, which the West sees as a partial success in its effort to choke, to stop, or to restrict Kremlin's revenue by refusing to purchase Russian oil. It is estimated that Russia it is estimated that Russia, with a cost of production of somewhere between $20 and $45 per barrel, will earn a small profit on its oil sales. At the moment, at the moment, Russian oil is trading at a price that is below the cap of $60 per barrel imposed by the West. However, the average price of Russian Urals over the last 10 years has been about $50 per barrel. So, while the price cap of $60 per barrel is unlikely to adversely affect the supply of Russian oil on Moscow revenue in the short run, it is likely to have adverse effect in the longer run. When the market price of a Urals rises above $60, this would increase the chances of violation of the price cap by traders. The higher the market price, the higher the market price when compared to the price cap, the higher also will be uh, the incentive for the trader to bypass the price cap and sell Russia oil at a price higher than $60 per barrel to willing buyers. This would in effect undermine the West effort this would in effect undermine the West effort to prevent Russia from earning the market price on its oil. But even if the West somehow managed to effectively implement the $60 per barrel price cap, it cannot really hope to restrict Russia's revenue through a price cap without also affecting oil supplies adversely at the same time. Question of incentives. Restricting the price at which Russia can sell its oil will inevitably affect the country's incentive to pump oil into the market. Economists backing the price cap believe that Russia would continue exporting oil as long as the price cap is above Russia's cost of the producing a barrel of oil. In particular, Russia kept up its oil production even during the COVID-19 pandemic when oil price fell below $20 per barrel, but expecting Russia to behave the same way in the future with price cap limiting its revenue may be unrealistic. It could it could well be that Russia expected the fall in oil demand during the pandemic to be a temporary blip. In such a scenario, it may have been more cost effective to keep oil wells operating instead of shutting them down to reopen them later. If price cap persists over the long run, however, this is bound to affect Russia's incentive to keep its oil wells open. It should also be remembered that in the long run production, the decisions are based not merely the decisions are based not merely on the cost of the production but also in the potential rate of the return from the other investors. If investors in oil do not offer return at a least equal to or better than other sectors, Russia may will decide to cut its oil investment and this would affect supply adversely. Such a tendency was obvious when oil price dropped by about 70% from mid 2014 to early 2016, pushing West Asian oil producers such as Saudi Arabia to look at diversifying their economic away from the oil industry. The West would do well to keep this factor in mind when it's imposed price cap, in the belief they would have no effect adverse effect on oil supplies. So guys, this was the article, and it was in very easy English language. So it was in very layman language, so you can understand this article. Okay, thank you guys. And if you are liking the session, then please like, subscribe, and share with your friend. Thank you. Bye bye. Take care. So guys, in this article there were some important word meanings. So you can get here the Hindi meaning of those words, like gamble means जुआ, fumble means टटोलना या गड़बड़ कर देना, restrict मतलब रोकना या सीमित कर देना. Then there is a synonyms also like prevent, conflict, prevent, confine, limit. And inevitable मतलब होता है अनिवार्य, अटल, जिसका synonyms हो जाएगा indispensable and inalienable. इंसेंटिव का मतलब हो गया प्रोत्साहन, इंकरेजमेंट, स्टूमुलस एंड बूस्ट. वेरी मतलब सावधान, केयरफुल, कॉशियस, अलर्ट, अवेयर. स्टीपली मतलब होता है तेजी से, सूट अप मतलब होता है गोली मार देना या फिर बढ़ना. एंड डिस्क्रप्ट मतलब होता है गड़बड़ कर देना, मेक अ मिस, ब्लर एंड ब्रेक, ये सब इसके सिनोनिम्स हैं. बयॉन्ड मतलब होता है प्रसन्नचित या तैरता हुआ. प्रिवेंट मतलब होता है रोकना, सिनोनिम्स हो जाएगा स्टॉप, प्ले, इनहैबिट एंड फेंड. इम्प्लीमेंट मतलब होता है लागू करना, एग्जीक्यूशन. अनरियलिस्टिक मतलब होता है अवास्तविक. तो ये थे इम्पॉर्टेंट वर्ड मीनिंग जो इस एडिटोरियल में आए थे. थैंक यू गाइज.